Hi, welcome to the EV Review, the show that will tell you everything you need to know about electric vehicle learning stocks. Today, we're going to compare an increasingly popular stock with investors, electric vehicle or EV stocks. Only 1 in 250 cars on the road is electric. Electric vehicles account for only 2.2% of the global vehicle market share. Meanwhile, governments around the world have established incentives to produce plug-in vehicles. In China, the government has mandated that by 2030, 40% of all automotive sales be in EVs to reduce carbon emissions. According to the Fortune Business Insights, the global electric vehicle market will be worth over $985 billion by 2027. Using the TipRanks stock comparison tool, we're going to compare 7 EV stocks. Let's start with Tesla. It has become one of the most valuable and talked about companies in the world. Tesla stock surged 695% in 2020, and this growth has continued in 2021. Although it has seen some volatility, year to date it is up over 250%. So, is Tesla still a buy? Analysts are mixed. Overall, Tesla has a hold consensus based on 24 analysts' forecasts for the stock in the past 3 months, and its average price target indicates over 11% upside. However, if we only focus on the top performers, those analysts with the best success rates and average returns, the stock has a moderate buy consensus with a more optimistic average price target indicating above 33% upside potential. Hedge funds are also showing signs of confidence. According to recent 13F filings, 7 hedge funds bought or added shares to their portfolios in the first quarter of 2021, with only 1 reducing. Looking at the stock's SMART score, Tesla has an 8 out of 10, which is an outperform based on this data-driven stock score. NIO was another EV stock that saw skyrocketing returns in 2020, with the stock going up 1,110%. The stock's momentum has continued in 2021 with a yearly gain of over 940% year to date. So, what are the experts saying as we head into the second half of 2021? The 200 hedge funds that TipRanks tracks are neutral on the stock with mixed transactions. Ray Dalio reduced his holdings by 15.52% in the first quarter, and 2 hedge funds sold out. However, 3 funds opened new positions in the stock, including Maverick Capital. Moving over to analysts, rating consensus is a moderate buy. Upside potential is significantly higher for NIO. If we look at all analysts, the average price target indicates over 76% upside potential. NIO has a SMART score of 7 out of 10, which is a neutral score. Sticking with Chinese EV stocks, we'll now focus our attention on electric scooter company, NIO Technologies. NIO too had outsized return in 2020 with an increase of 229%. Year to date, the company's stock has gained over 200%. So where does NIO stand according to the experts? Currently, it is the only stock on our list with a maximum SMART score of 10 out of 10. It is also the only stock that boasts a strong buy analyst rating consensus with both all analysts and the top performers. Currently trading for around the $30 mark, the average price target of $43.90 indicates over 44% upside. 2021 has not been kind to the Nikola Corporation, the manufacturer of zero-emission trucks. Year to date, the stock has dropped by over 50%. The company recently received negative publicity surrounding performance awards for executives. At its peak, the stock traded at almost $80 a share. It is now priced at $11.98 with an average price target of $18.80, showing 56.93% upside. Saying that, analyst consensus for the stock is a hold, and top analysts predict a less profitable 21% upside. It's not just analysts who are bearish on the stock. Hedge funds, insiders, and individual investors, news sentiment, and financial bloggers all agree, and the stock has a minimum SMART score of 1 out of 10. LI Auto is another innovator in China's new energy vehicle market. The stock has not seen any recent activity from hedge funds or insiders, and despite a positive outlook from analysts, financial bloggers, and individual investors, it has a SMART score of 4 out of 10. The Workhorse Group is an American company that manufactures electric power delivery and utility. Its stock plummeted in February when it lost out on the USPS tender. At its peak, the stock price exceeded $40. It is now trading for under $9. Where has that left Workhorse now? Analysts have a moderate buy rating consensus. Upside potential is the highest on the list, with the price target indicating 97% upside. Hedge fund activity in the first quarter was positive, with 2 funds adding or buying stocks, with 1 selling out. Looking at the stock smart score, it has a 7 out of 10. It's not just the vehicle makers that are considered EV stocks. Blink Charging designs, manufactures, owns, and operates EV charging stations. Hedge funds increased their holdings in the last quarter. Analysts are confident overall, with a strong buy rating consensus and a price target of $38, representing close to 11.5% upside. Top performing analysts are a little more cautious, with a moderate buy consensus and upside potential of 8.5%. That's it for today's overview of EV stocks. Please let us know in the comments below which stocks you'd like us to compare. And also, don't forget